Come, let us prepare. Make some good profits today. Market left us big clues right here. This is no surprise to you, isn't it? Once you're able to understand that yesterday we had that breakout here. So it's important you watch yesterday's video later. Links in the description. You have a better understanding of how to prepare for this, what we call a buying continuation structure right here. There is very key liquidity here, because we were just waiting for the moving averages to catch up. And you can see here in the daily chart, this is absolutely no surprise how the upper Bollinger and the 5-day moving average, just take a look, is exactly as what we were planning for. And as I always tell you, do not short this until at least we retest 5-day, show some structure, see some sellers appearing. So this is exactly why, and you see it for yourself now. Videos from yesterday that will link you in my thought process to the video before that and before that, so you can understand the rationale of why going long from here and no turning back thereafter. So you have to watch it. Please understand the concepts of liquidity from there, but please watch it after this, especially if this is the first time you're watching this. Now, Discord server members, nothing new right here, because throughout the entire day you have to review this. This is live analysis throughout the entire day. I summarize this, all the reasons you do not short this today. So let's run through the highlights for this. Now, firstly, I explained to you about this is 9 o'clock before market opens. I reiterated the reason from yesterday's video about buying continuation from yesterday, and we will grind up in that orange and green, and you see that happening right now as well. So that's the first. Secondly, at 10:20, which is about here, this is 10:20, I told you that there is no strong selling participating at all, isn't it? No strong selling participating at all. There is absolutely no reason to go long. To go short at all. No strong selling has appeared. So don't short this until it has. And we saw some beautiful liquidity here at 9.55, which was here. This was 9.55. And you see how we managed to find that pink liquidity here. And just take a look how penny perfect the pink liquidity here is. Just no reason to go heavy, because this is not a deep structure, right? If it went a little deeper, this would be very ideal. But you see how the pink liquidity was building liquidity here, and I will show you later here as well. Now, it's important because we identified the magenta. Take a look here. If you understood magenta algorithm here, you would not have short this until we retested this magenta, right? Because otherwise, this is what I'm telling you. If you force it too early, you will get boiled alive as it grinds up and never grabs in. So the point is understanding, and having this pink algorithm helps you to go long. And understanding this magenta algorithm will prevent you from shorting this until we grab the liquidity at the magenta. And just take a look how this magenta protected you from shorting this throughout the entire day. And look at this. Your only short opportunity came from this break in magenta. Penny perfect, right? Just take a look how magenta protected you. Penny perfect right there. So this is the reason why I always tell you, do not take puts at supports. You wait for the clearer breakout and grabbing the liquidity. If this truly wants to grab it like that, right? You wait for this to turn into resistance. And so the point of having the algorithms like that became so important, so precious, so precise. And this is why you needed this penny perfect algorithm. Just take a look for yourself, right? And this was already determined at 10 a.m. at the start of the day. Absolutely beautiful. So this is another reason you understand the concept of boiling you alive. It's one thing to be stopped early, but it's another thing. This is only something I tell you, a real trader will tell you, not only on hindsight, because if you're trading in real time here, you will understand this. If you ever got caught in a trade where it started grinding up, because you would never understand how it feels to be grind up, to be boiled alive. Your contract value drops, but you realize you don't see a reason to stop because it's still grinding up, and so you allow it to boil you alive until it goes to zero. And I've talked about this. There was a training video, if you remembered. I demonstrated to you. If you took a call here, for example, even for calls, let me tell you that. You took a call here because you are way out of the money here. You took a strike here, right? Even if this went up here, like that, even if this went up to, in this case, 3 points, you would have still either lost money or just made maybe 5% to 10% only. In 3 points, it just doesn't make sense. So sometimes you just have to be very careful in your trade selection, right? And as I always tell you, as a real trader, not someone just hindsight. On hindsight, this looks great. It's 3 points. Now, if you don't have proper finesse, if you don't have proper trade selections, you will be in trouble. I talked about this. I used live examples about this in one of the training videos. So please do watch it, Discord members. Do catch up on the training videos. I have dozens of hours of it. So please, I think hundreds already. So please do watch it when you have the time. Now back to this. I even explained why this is not heading down, right? I told you have to wait for the moving averages to catch up, right? Because there were too many people who were shorting. That's why you see grind ups. The reason is because they were either adding under their position or they are slowly removing and slowly selling away their position. And so there are buyers that are slowly grinding up like that. So that's the concept of a buying, of a grind up here. It will happen. There will be a small pullback, at least. It will happen once the moving averages catch up and once all these short sellers liquidate their position. This is just how it works. So you just have to understand that. And when you have the context of that today, this becomes a piece of cake for you, a walk in a park, because you understand exactly what you need to do. Even if you didn't catch the long, even if you didn't catch the trade up, it doesn't matter. As long as you knew not to be forcing trades to short this, then you would have won your battle for today. Because the point is, this will benefit your portfolio, and that's what you want. And I will teach you in this weekend's training video about taking credit spreads, how you can take credit spreads to be taking advantage of grind ups like that. And I talked about it as early as 11 a.m. Yeah. Once you know how to be taking credit spreads, right, you realize once it starts grinding up, you would have extracted more than half your value. In fact, I would think 70-80% of your value once we got up closer to the upper Bollinger here. And you can see we retested again the upper Bollinger. Right, so understanding this, it's important. Upper Bollinger and 5-day moving average catching up here. Watch yesterday's video, which will lead you throughout the entire week's thought process so you can understand this better. If you're serious about this, this is something you need to learn and understand first. Now, at this point here, where do we go from here? You do not short this until there's some tapering. Now, there is liquidity here for a dump. Just be patient. If it wants to dump, you are not going to miss it. Here, if it wants to dump, you're not going to miss it. Right, so just set alerts at the blue algorithm here. By then, your 5-day moving average will turn into some sort of resistance already, because it would have already caught up, in this case, with the the orange algorithm. And if we do grab the liquidity early from the 5-day moving average, you will grab the liquidity of that orange algorithm or that blue algorithm as well. If you truly want to wait, you can wait for cups to close, especially off the yellow levels here. It's a distance, yes, but if it wants to dump, this is not going to stop it. You would have plenty more room to head down. If you're truly looking for an epic dump, it has room to head down back to where the 20-day moving average and 200-day moving average is. There's even a gap here if it wants to close. So if you're truly looking for a dump, you can afford to wait. But otherwise, see how the 5-day moving average is just catching up, and we are still grinding up in that buying continuation structure and understanding buying continuation structure from the break here. Right, so this becomes quite straightforward. Now, if we take a look at daily, today's 1-minute chart here, right, you see liquidity here that's 691. You see magenta that's tapering. So just pay close attention. This magenta is reflected in the orange here in the 30-minute. So wait for cups to close if it wants to have some sort of pullback. By then, your 5-day will already start catching up to the trade here. So I'll translate this here. Right, wait for the cups to close. If this truly wants to head down, it will have to soak up all the buyers that are from this level here. But otherwise, there is maybe a starter position here, maybe from this 691. So do pay close attention to that. If this truly wants to head down, I can afford to wait. But if you're looking for a pullback, maybe of this 691 here, this level, or this 694 level here. But most importantly, on the 30-minute chart, it only can happen if there is the blue algorithm. Remember, I talked about this. If you've been following me, we can watch the previous videos. Chain up your thought process as well. As convoluted this may be, if you watch the videos, I highlight which ones to be paying closer attention to. And I always tell you that if we are dumping, it's always the blue algorithm that causes us to dump. So you just have to pay close attention to that. Right, watch the video, see it for yourself, as I always highlight it as I do like that. And you see the blue algorithm liquidity is the one that you have to pay close attention to if it wants to dump. So if you don't see blue tapering as yet, it's probably not dumping. So you just have to be a little bit more mindful of that. Now, 5-day will have to catch up. Eventually, we will have to retest the 5-day again. So just keep that in mind if you're looking for pullbacks. Eventually, we will have to retest 5-day again for this to continue heading up. And more importantly, you want the bottom Bollinger, right? So once again, this is not an issue. Right, you wait for the bottom Bollinger. Let me explain this. Right, as with, remember, as I mentioned to you about supply overhang. Right, back then, when you see the upper Bollinger not trending down here, right, you see upper Bollinger not trending down. I told you this is a supply overhang. It is going to continue heading down. Remember, that's what I told you. Until upper Bollinger starts trending down, then we had a chance to bounce up because the liquidity has started getting closer to the action. Simply put, so this is the same logic. If you see this happening, right, you want to see the bottom Bollinger starting to join in the action, and there is therefore more likelihood this will start to pull back. Now, the larger move here will be if this bottom Bollinger starts reclaiming your 200-day, not your 20, because your 20 will always be at the middle of Bollingers. It's the 200. You want your bottom Bollinger to cross the 200 before there is even stronger action. By then, your upper Bollinger will start trending up as well. Case in point, from the last time we went below 200-day moving average, you see how when the bottom Bollinger starts trending up here, upper Bollinger continues along with it. So it's important here. You have to understand that. You see the bottom Bollinger can trend down for a while. Right when before this continues to head up, retest the upper Bollinger. But once the bottom Bollinger starts trending up, you see it chops a little while waiting for the bottom Bollinger to catch up here. And obviously the 20-day moving average that trends together with the bottom and the upper Bollinger, because the 20-day moving average will always be at the dead center of both Bollingers. You have to remember that. That is just mathematical. That's just how it's derived, and that's why I use the Bollingers, because I also use the 20-day moving average. So if you have to, you have to understand your indicators. If you're using that without understanding how they are being used, then you are not truly trading. You're just using them as a confirmation bias. So understand math behind that. Understand what they tell you. They don't tell you the full story, but as I tell you, they are a trend indicator. If you've been following me, I've always been using terms like that. This is the language that I use versus trade indicator, right? They are trend indicators, but they shouldn't be telling you when to take a trade. They would tell you the trend that you can use to translate in the 30-minute before you use it to translate into the 1-minute chart for your trade entries. So understand that, right? So it's all right if it's trending down a little. I know some of you are concerned with this, but understand, I talked about supply overhang, right? And this is the same concept, just the reverse. So don't be too concerned, right? Obviously, a big part of the market waiting for bad news to dump. Trust me, if they want to release bad news, they will wait for all the short sellers that started shorting here before this gap and even here to expire out before they dump, right? It's just how it works. It's just liquidity. It's easier that way, swimming with the current instead of against it, right? So they've already planned for this, and that's why I tell you it's a big club, but we are not in it. But you don't have to be in it, right? Watch the videos from yesterday. It will help you change your thoughts better. So thank you very much for watching. I will see you closer to opening bell.